Hi, everyone. Another big mistake that foreign investors make going into the Chinese market is having insufficient financial resources to actually scale up their business over a period of time. Things in China are not as cheap as they used to be. So when you are calculating your overall expenses and how much things may cost you in terms of headcount, rental, supplier costs, raw material costs in general, this is all going up. And particularly with COVID and the pandemic, things like logistics costs have just skyrocketed. So it is really important as you are implementing your structure in China to make sure that you're budgeting for the right amount of financial resources that are on hand. One of the biggest obstacles that pop in people's way is the fact that they run out of cash very quickly. Cash can flow like water in that you just use way too much of it, particularly if you don't have a financial controlling arm within your organization. So a couple of tips I would recommend is one, make sure you really are budgeting appropriately for your business in China and that you understand how much cash you will need to survive as well as then to scale up in the market. And then ultimately, the second tip is make sure you've got a financial controller or somebody who can have an overview between the budgets that you've created against the actuals that are occurring. Ultimately, this financial controlling person should be an enemy to the organization because they should really be evaluating how you are spending your cash and how you're spending your financial resources in the market. Opportunities will fall at your doorstep left and right. The key is, are you looking at those return on investments? Do you have enough cash to say yes to everything? And if you can't say yes, if you do want to say yes to something, will you eliminate something out of your budget in order to be able to then finance that new investment? So really, two things I want people to get away with is really analyze your budgeting and make sure you have somebody on hand, whether in-house or outsourced, that acts as that enemy, that financial controlling arm that will actually counter you to say, do you really need to make this type of investment? Do you really need to add headcount? Are there no other solutions around that? Again, running out of cash and not being able to progress and not being able to pay salaries or rent or suppliers can lead to so many reputational issues and image issues surrounding your investment in China. And we don't want to fall into that trap. Ultimately, to get further investment, you're looking at either increasing your registered capital, trying to obtain local loans, which is very difficult to do, especially if you don't have 3 years of profitable history. You might want to get foreign loans, but that will probably be from your headquarters trying to get that, or adding investors, right? A lot of people, the trend right now that we're seeing is a lot of people are looking to acquire Chinese investors or APAC investors into their business for Asia and China. And the question is then, how do you structure that? Where is that money going to sit? And what are you going to use that money for, right? So be aware, insufficient financial resources is a relatively large mistake, can get you into a lot of issues along your China journey. We want to avoid that, and let's think of the ways how we can get around that to protect your business, grasp that opportunity, and scale up in the Chinese market. I hope this video has helped, and if you've got any questions, reach out. Take care and goodbye.